Welcome to part 2. Let's keep upping your investing game. You've already decided on an investment account. Now, open it. For the 401k, some employers auto-enroll you. Others make you opt in. HR has the deets. IRAs. Open these through an online broker, robo-advisor, bank, or credit union. Brokerage accounts. Choose a brokerage. It can be a human stockbroker or robo-advisor. You can open and fund online. A 529 plan. These are state-sponsored school savings accounts. Open through a broker or directly with your state. Coverdell ESAs. Available through banks, credit unions, or brokerages. Next, choose your investments. Match them to your risk tolerance, goals, and timeline. Lower risk options are safer, but generally offer smaller returns. Think CDs, bonds, money market accounts, and high-yield savings. Higher risk options like stocks, real estate, crypto, hedge funds, and IPOs offer more reward potential, but also more risk. Side note, mutual funds and ETFs are a way to invest in stocks, but in a safer and more diversified way. Final tip, stay diversified. Like playlists, variety is good. A mix of high and low risk assets balances your portfolio and helps offset losses. Bottom line, your goals, employer perks, risk tolerance, and timeline should guide your choices. So keep an eye out on your investments and recalibrate as needed. Good luck, and see you on the next one.